So, how is household disposable income calculated? Now, there's some variability to this calculation depending on your age as a parent, or the age of both parents, in fact, and the number of siblings. As I mentioned in response to a question earlier, you don't actually get that much of a benefit for paying for another kid in college, even if you're paying a lot of money out of pocket. You really only get about $5,000 per kid, roughly, is the average I've seen, knocked off for each kid that you're paying for college. But a good way of, again, a back of the envelope way of calculating what they're considering your disposable income is roughly parent income plus student income minus about $50,000. It could be a little bit more if you're older parents or you've got multiple siblings, multiple kids in college. It could be a little bit less if you're younger, but generally speaking, it's roughly parent income plus student income minus about $50,000. Like I said earlier, external scholarships are treated as student income and increase your EFC. So what are some tips for maximizing financial aid? A lot of these are honestly just derived from all the material we've covered so far. But my top tips for maximizing your financial aid include maximizing your contributions to retirement accounts. And if you're an older parent, you can often do what are known as catch-up contributions, where you can contribute even more to retirement accounts to catch up for previous years. Paying down credit card debts and other loans. Now, obviously, this is only if you're in the income and asset range to potentially receive financial aid. But remember, the financial aid calculation isn't going to take into account your loans that are not in the form of a mortgage. So if you've got like a personal line of credit or credit card debt, paying that down can definitely increase your financial aid. Taking assets out of your student's name, because student assets are assessed at 20%, whereas your assets are assessed at 5%. So you definitely want to take assets out of your student's name if you can. Again, negotiating your aid package. Now, if you want to negotiate your aid package, you need to apply to multiple colleges with a similar profile. Grinnell College is going to maybe work with you if you're negotiating with a better aid package from, say, like Hamilton College or a similar ranked college. But if you're trying to negotiate with an aid package from San Jose State, they're going to be less likely to give you credence because they're going to say, hey, we're a completely different institution. We have a different value proposition. Finally, you also want to consider updating property tax assessments if your house's value, or the value of any of your property, frankly, has dropped, just because sometimes that property tax might not necessarily reflect current market conditions.